Hey, what's going on, family? MC Fire here. Tapping in with the Monday video, kind of bringing to the front of the classroom some things that we've kind of noticed as regards to the economy, and then also some things we obviously have been seeing in the overall market as regards to price action, and just kind of seeing how things are going. If you guys have been watching the channel, you kind of know that we've been in this AEP trade. We've kind of rolled it, taking our profits off the table and really pushed that strike a little high. But I just want to let you guys know on price action, essentially, how this has kind of played out, move forward, and how it's continuing, right? So you see the system, kind of know it's IOU, identify, identify the trend, outsized candle, and then you set the trade, right? IOU, identify trend, look for outsized candle, you take the trade. And so the trend here at AEP is up, identified by the weekly. That's how we kind of see the trend. Outside candle down here getting washed, and then you take the trade, setting the risk down here, and then the reward is kind of continuing to push here. If we look on here, bid and ask is saying that we're already in the 107, um, essentially pushing almost a dollar higher, right? Almost. So, and you can see that represented here in after hours trading. A nice little pullback here, and then pushing after hours in the morning session so far. Really good stuff. So as we come in on Monday, as we approach the open, right? If things still shape up pretty good, we could potentially be opening at 108 ish. Not too bad there for AEP. Also, IO and Q. That's another one that we've kind of looked at here. Uh, Took some heat on. We're taking some heat on that. It started to trend with the overall rest of the market, which, mind you, to bring that to the front of the classroom, is absolutely getting hammered. Probably should have started with that. But the crazy part is the overall market is down another percent today. Another percent today. So from highs, we're peeling back um, a lot of percentage, right? Now, some people might say, "Woe is me, this is not good, yada yada woo, woo," right? For us, this is a little different. We're actually happy that things have pulled back this much. Seriously. Because the testing this level at 550 is good, right? You might get a reaction, but since it dropped like 1%, and then we're looking at another percent essentially on the drop. So for anyone who thinks that things can't recover or the market hasn't recovered or this is new, the market's giving you a gift, in my humble opinion. The market's giving you a gift in that would you rather buy things at extreme highs at 613, or would you rather be a buyer at things at 540 with the market potentially recovering, right? We got some bad news also on Tesla. People are going around burning Tesla, so we want to kind of bring that to the front of the classroom. If there's that much bad news on something, I do like to at least take a peek at the price action because by the time it hits the news and there's bad news, it's blood in the streets, the way I like to call it. That's the best time to buy. So blood in the streets, buy, yeah, buy the rumor, sell the news. All these old adages. This is when it kind of makes sense, right? You're seeing Tesla stock tank, but there was a slight rally. So maybe if it gets back down to this 221, 224 level, you could see a potential pick buy in Tesla, right? We also kind of did the same thing in UNH. There was really bad news on UNH. We did still using the bad news as where do we focus our eyes, like Sauron, where do we focus our attention? And then we use the technical to see, okay, things have been extended to the downside considerably, 3TR. These people are offside. Market mechanism is gonna do its thing, right? UNH is one of those examples. We recently did the same thing in the Qs as another example, right? Nice reversion to the mean trade to prepare for it to continue falling, right? Reversion to the mean, and then bam, it continues falling almost literally the next day. We got out, didn't hold it, didn't argue about it. It's approaching this. Um, it's approaching the 8 period moving average on the weekly. You see over here, and then you see it's approaching this level on really the weekly as well. So approaching this weekly level and the 8 period moving average, definitely prime position for it to thrust to the downside, which it did, do. but we took where our edge was this trade here, and worked out really good. Kind of went sideways and then popped the last yeah 2 days. Took our money, ran, 40% winner there. Let's look at some in plays here really quick and see what we're looking at. DuPont here, really sizing momentum to the downside. Really, if this is a trend and you've got candles in line with the trend like this, really there's probably some continuation to the downside. I would almost say you could target 72.55 if you're a scalper, something like that. Google, kind of same deal. An intense thrust to the downside, breaking previous recent pivot lows. So 3 ATR, definitely mark that in your charts as a potential zone to take a buy on something like Google, which kind of corresponds into a major pivot low if you look to the left of the screen there, right? This isn't rocket science, right? Also, as you can see on this screen, it does have the average of the 200 period moving average there. That is a 200 period moving average. So getting to that level means that you're going to be buckling your seatbelt kind of around a really good spot to buy. 200 period moving average, pivot low, 3 ATR, all good spots to in our book buy. We like to buy at negative 3 ATR, trend changes, and outsized candles that get washed. Those, and just kind of keep it simple. That's your really playbook there. Um, so Avion, right? Not too bad there. It is, we got a 21 period moving average going up. So if you're willing to accept the risk there, if you're willing to accept the risk there, right, you could potentially keep your wrist tight and say, hey, if this gets washed, the 21 is up. It did. It's making higher lows from this pivot. We could potentially see it get back to the mean, right, for a nice little base hit. Kind of did the same thing here. It was an uptrend. You get this wash back to the average, but there's really no follow through. And if you're looking, first sign of danger, this is where you would want to sell it anyway. If you're looking to the left, you've got plenty of resistance up through here. So rolling it first sign of danger just kind of makes sense right around here or even up here, right? So if we can potentially make a higher low though, approach as a nice target for a pivot high, or respecting this pivot low potentially as a risk profile. GEVO, kind of same thing. They kind of seeing the same theme here. Um, Nasty break on the downside for the weekly break retest there on the downtrend 20 period moving average down, unbalanced volume down, squeeze, looking like it wants to set to fire to the downside. That's exactly what's probably going to happen in concert with the uh, negative earnings, right? So really, you would be targeting 63 cents potentially for a buy. 63 cents for a buy. Why? Technicals. It's very very straightforward, right? You got this level here, and you've got 3 ATR there, right? So we believe that if it can go and punch down to 3 times its average range, that'd be a good spot to take a nice juicy buy there. We already kind of talked about Google as well, but let's go to look at some other name brands here. AVGO, we'll bring that to the front of the classroom. NVIDIA will bring it to the front of the classroom. Probably going to be the same thing, and they'll also bring some commodities. We want to talk about gold, silver, stuff like that. So if you're dropping here in AVGO, it's very similar story, but a lot more room to grow. Remember, our buy is, unless we're willing to accept the risk and just want to get in, your buys according to the system or 3 ATR and trend changes. Kind of very similar to what we did at Boeing for a trend change. Boeing, there's been a lot of news about Boeing want to acquire the F-47 contract for the U.S. military, right? Our new sixth generation fighter to compete with China's, right? But Boeing, we were just willing to accept the risk here because we want to be in Boeing, wanted to track it, and then we took the trend change as well, right? Didn't really get down to 3 ATR. That's why we just accepted the risk, right? Because sometimes it might not get down to your 3 ATR level, but in these circumstances, other companies might just do that. And then also the Qs, oops, one more Q, 3 Qs, yep. The Qs actually might get down to 3 times the average range. They're kind of in that ballpark in that zone there. So if we can get down there, we'll put an alert down there as well. Relatively so. You guys need to be doing what you know to do in these bulk buying environments. Don't miss the boat, don't miss the mark, right? I want to bring to the front of the classroom major pivot on why that's also an important level. Um, Look here, we'll bring it to the front of the classroom. So this level right here, this is a major pivot as well. This could be another zone where you would say, okay, I wouldn't mind taking a buy if we approach this level. I'll probably get below that, so I have to raise it up a little bit. But okay, so raise it up a shimmy. I must raise it up to that support level there because this is a pretty major dip here. So um, I mean, major support here, major support. It would have been resistance if it's going up, but it's major support here, right? So we want to put those key levels on there for potential buys if things fall through the floor, which I'm totally okay with them doing. Some people will say, well, why would you be completely okay with doing that? Well, you gotta look at it from the perspective of an investor as well. Yes, in this channel we talk about trading, but really, if we go look at something like SCHD or the Qs, SEH, SCHD, you'd have to say, well, I'd rather get things on the cheap and buy dividends and then buy growth on the cheap. I'd rather buy growth on the cheap, and then as it grows, parlay that into something like SCHD in the future, right? SCHD, if you notice, hasn't really gone much of anywhere, right? As the market's trading 3% within a month, 4% within a month, SCHD hasn't really moved anywhere. So your dividend paying super safe stuff is still kind of just trading while you're doing its thing. So if you're looking for flights to safety, right, you have stuff like SCHD. We also can look at something like a contrarian, really, GC gold, right? While the market is trending down 1.4%, 1.5%, this is trending up 1.2, 1.27%, right? And, having do I think there's more room to grow? Yes. Ideally, in these times when you've got news, right, you're supposed to be selling the news. Right now, there's a lot of talk about, getting gold, getting silver, yada, yada, woo, by the rumor, not the news. It's kind of hard to justify buying in an environment where you're sitting at 3 ATR and saying extreme higher on GC. It's really hard. We'll look at silver real quick. Also, so silver kind of same thing, kind of testing those pivot highs there. I know some people that I kind of talk to on the side are going to be relatively happy about this. Gold, silver, kind of pushing highs. I would say though, some people get excited about the miners. Uh, the miners are they're still hit and miss, right? So the move is really in the commodity itself. The miners will make money if the commodity itself is priced accurately. So just kind of go to the source. A lot of times, mining companies go out of business based off of fluctuations if they take on too much leverage, and then the price starts to fall to not justify productivity. They're gonna make cuts, and then things just kind of go downhill from there. So you just have to be cognizant of the risks in that business. If you're willing to accept those risks, more power to you, right? Um, that's kind of what's going on as it regards to the overall market as the main hitting points. Now there is some other news and other catalysts out there. We're not going to touch too much on stuff like that. But the crazy part is if we go back and look at this Q trade, right? We go back and look at reverse to the mean trade, and then we go back and look at was there any indication to get into the short side of things? Well, if you take a traditional chart and you see these market orders build right here at the pre-market, yeah, from a day trading perspective, I could definitely say, well, yeah, you could see that to the short side on a day trading perspective, right? But nobody has a crystal ball in these markets, so they could be down, they could be up on a day. You never really know. News is a catalyst, and you have technical fundamentals. But when you see something like this, right, it's almost screaming to the downside, right? Uh, Kind of traded down and after hours. There's your support at 490, 479.81, right? If you come over here to the 2 minute chart, this is 10 minutes, this is 2 minutes. Come over here, it broke below that, right? Tested it, nice little wick test there, doesn't really break highs. And then you start seeing as it push, a volume starts stepping in negative, and then bam, it kind of fails, breaking that low there, right? So you say, well, this is hindsight. Can you do it in real time? Well, absolutely, you can do it in real time. But the crazy part is I mean, we how many times we talk about break retest failure? How many times we talk about a break to the upside retest and then push? This is the ideal. So if we're zoomed in on, and then that the catalyst starts this massive failure. So off the 8 period moving average, right? Or continuation down from this level, right? Let's if we go back and look at the catalyst that started the failure, the pivot failure. Go back and look at that, right? Just basically after hours tested that level and failed. Boom. Market just wanted to reject that level. Is there any indication of that on that move? Well, not necessarily. But again, you're already out. This is where we got out. If we go back to the weekly chart, for buy, sell, 8 period moving average resistance, this is where we got out. So this is something we've learned from a lot of our mentors, and a lot of times just watching the market and being like, yo, we could wait till it gets back to the 21 period moving average, or we could get out at the first, what I call the first sign of danger. The first time is a risk to reward justified to the first sign of danger, not to where your heart wants it to go, right? So it's pretty straightforward. Going up, kind of getting to that high there, and then getting rejected, completely summarily rejected with size. So, guys, thank you so very much. MC Fire here. I'm glad I can bring this video to you guys, and just buckle on for the ride, man, which is coming. I can't really express to you enough how excited I am that the market finally is pulling back in a major way. Look at my chops. Look at my chops, right? 468 to 462 right now. So we're basically at the support level. It's got a lot more room to go before we look to take a major back to Brinks truck up, so to speak. You guys will be there to see it. Thanks again. Have a good day and goodbye.